Hi everyone. I'm Toby Turtle, the official mascot of STO Summit Spring 2025. We're excited to share the recorded sessions from the world's leading summit on security tokens and real-world assets. Hey Matthew Schneider, over to you.
Good morning, afternoon, and evening to everyone tuning in. Since this is going to be clipped, and I know that it shows up on YouTube, you're tuning in to the International Security Token Association's STO Spring Summit. I'm Matthew Schneider. I am the chairman of the organizing committee for ISTA and the CEO at Building Inc. I'll be the moderator for this panel, Tokenizing the Tangible, the Rise of Real Assets in Web3. Joining me on the virtual stage are 5 fantastic speakers. We have CK, Daniel, Edward, Ghassan, and Herwig. Let's do a quick round of 30-second introductions, starting with CK, if you'd like to kick us off.
Yeah, hi. Thanks, Matt. And the rest of the panel. Nice to see you again. I'm CK. I'm the CEO of SBI Digital Markets, which is a licensed entity in Singapore. Basically, we look at tokenized RWA in 2 ways. One is to really originate and distribute to the traditional ecosystem, the traditional institutions, the high net worths, and so. And the other channel of distribution is really to the Web3, which I think Herwig talked about just now. We are also trying to bridge Web2 products into the Web3 and provide like end-to-end solutions for them. And our landscape is quite global. However, our strength is really in the Asian countries. Yeah. Thanks.
Hi guys, Daniel here, co-founder and CEO of StegX. I'm operating a marketplace ecosystem which is focusing on tokenized real assets. We are based in Europe and Germany, but we are operating globally and connecting assets with institutional investors on a global scale.
Ed?
Hey guys, I'm Ed Nwokedi, founder and CEO of RedSwan. We are here. I'm really excited to be here with this great panel. Some faces I recognize, and CK, I met you a while ago. Good to see you. Looking forward to a good conversation. At RedSwan, our goal is to put on $1.2 trillion of real estate on chain for the next 5 years, and hope with all the guys on this panel, we'll make that goal happen. Thank you.
Ghassan, if you'd like to grab the mic.
Yeah. So my name is Ghassan. I'm the co-founder and COO of SmartBlocks. SmartBlocks is basically a real estate tokenization platform where a marketplace we are gathering the service providers and end user in order to get benefits worldwide, especially in the Dubai and Middle East, where I think everybody knows that it's going viral nowadays, and we are lucky to have the leadership in UAE. They are supporting this a new technology. Looking forward, it could be, I didn't meet the leaders here in this industry, but I really aware and I know every single of them because I follow them, and it's my pleasure to know every single of them. And looking forward for a future collaboration and values in this industry very soon.
My name is Herwig. I'm the founder and CEO of STM.co. We are a data and media hub for real world assets and tokenized assets. You can just think of me as the industry's biggest cheerleader, and I support everybody on this panel. I'm looking forward to get into it.
Awesome, awesome. Well, this is a phenomenal lineup of people from all over the world. So as a heads up, this is a 40-minute panel. We've got some great questions that I plan to ask to our speakers. We're going to try to keep everything around 7 minutes so that we don't run over schedule too much. To kick things off, my first question, and this is open to anyone, you can take turns, unmute, and jump in as you see appropriate. First, I'd like to set the stage. What has changed in real estate, finance, or technology that makes tokenization a practical technology and no longer just a theory?
The industry is changing. We're noticing that over the past 15 years, when interest rates were low, we were seeing record pricing in real estate, record transactions taking place, and the flywheel for liquidity was just at its highest peak. But since then, we've seen significant increases in interest rates, which drove down the prices of real estate, which kind of stopped the flywheel from turning. Liquidity is so important for every business, especially in real estate, because you need liquidity to keep that flywheel turning, because you need to liquidate to generate capital to buy new real estate and keep that going. Well, when the market starts to slow down, we realize that we have a problem with liquidity, and we need more players in the marketplace in order to get that jump started. And so I think tokenization has been a great tool for providing this liquidity, for providing this access, because it's been too long that we've left out the majority of investors from participating in high quality real estate. And I think we're making the change by opening the doors, borders, to allow for cross-border transactions on a much faster pace. And I think that's what's going to be a major difference on how we look at real estate, and how, companies that are buying real estate, how they look at holding on to it. Real estate is an asset class that we can't manufacture. So if you keep buying and then selling, pretty soon, if people stop selling and start holding, there won't be anything to trade anymore. So you'd have to start looking at the way stocks are traded, which are on a share basis. So I think this is a transformation that we're all seeing, and that we're all kind of looking forward to play within that field.
I would love to take it from different perspective. Thanks, Edward, for sharing this info. But honestly speaking, let's say from the Middle East here, because UAE is holding 200 different nationalities and different worldwide cultures, people. So people, they was looking always to invest, and everybody knows that real estate is a high ticket investment, where the wealthy people or the high income people is always easy to invest in the real estate. The nice with the tokenization has make it easy, and real estate, it become for everyone and anyone, to be honest. And the barrier of the global investment in the real estate, where I can have 5% in Dubai, 2% in Far East, 5% again in the US. It's give a diversity of resource of income for anyone, instead to put his income in the bank, and the inflation of yearly basis and losing the amount of value. So now it become it's generating more income and have diversity of resource of income. I think this is where it make the transformation, especially here in the Middle East.
Maybe from my point of view, I think there are three reasons why now is the opportunity to tokenize real world assets, not just real estate. One is, I think, the issuing side. All the issuers, regardless asset classes, I think have finished their testing over the last few years, be it banks, be it asset managers, and the real estate developers. I think all the POCs have been done, and every use case has already found their niche of why tokenization shows values to the investors or to the whole chain. So I think that this is the time to really scale that up. The second reason is technology. I think technology is in the state of consolidation. Every big player in the tech world has found their niche, and they are now consolidating in a very collaborative partnerships.
Looks like
So I think
connection
really,
issue.
as you see, US, Europe as well.
CK, we lost
Europe
you
as
for a
well,
moment there.
regulations. Sorry, yeah. So I was saying technology is ready, issuers are ready. And lastly, I think most importantly, why this is the correct time is because of regulations. US is picking up so fast. Middle East is ready. Europe is ready, and Asia, a lot of countries in Asia are either ready or getting ready. So I think that this next 2 years is probably the time inflection point for RWA tokenization.
Yeah, I would say that's basically a mix of most of the topics. All of them are correct. But what I see the most pressing need from the real estate side is that there's a lack of access to capital right now. So bank loans are getting rare. They get more hard to get them. So asset managers and real estate developers look for alternative sources of financing outside of the regular financing channels, and therefore they need to look outside of the home turf, need to look outside for new investors, for new sources of financing, and that's basically something which tokenization brings to the field.
I have to say that I give a lot of credit to the CK and the Asian community in general, that they have been really, in my opinion, leading the space of tokenization. I've been traveling around the world for a few years now and noticing where a lot of the activity has been taking place. And I get encouraged when I go to Singapore and Japan and see how much real activity is taking place. They're seeing billions of their dollars worth of assets being tokenized and distributed, which shows me that it is working, it is necessary. And I just want to commend, CK with SBI and also others in the Asian community that have been propelling that, because now the U.S. is paying attention, and now the U.S. is making the mandate for digital assets to be a priority within our country. So I just want to say thank you for that.
And thanks. I mean, all of us in the industry are driving it in our own jurisdictions, our regions, right, where we are strong in. I was just sharing with one of the regulators in Asia actually earlier today, and I've gone through all the use cases like over the last 8 years or so, and there's tokenization of real estate, bonds, different kinds of funds, VC funds, PE funds, market funds. And actually, the conclusion I have when I look through and take a sit back now, in reality, all these projects have been going on. A lot of people are trying to put use cases on live, but the real adoption, I think at this moment there's only two. One is money market funds, just because there's a lot of use cases, new use cases can be used there. But the second one, surprisingly, is real estate. Surprising to me is real estate, because real estate is something very localized for appreciation, and real estate is probably one of the hardest as a class to raise money compared to the other capital market products. However, it seems like I can see, like in Thailand, in Japan, of course in US with you guys, real estate seems to be the one that's getting a lot of adoption, like live deals going on, surprisingly. So I think real estate is really leading the way in terms of asset classes for adoption.
One thing that's clear is that we're no longer just pushing a technology hype, and that this is driven by a real market need, which is exciting. I think it's good for all of us as businesses, and it shows a maturation in the technology itself, that it's actually desired. So as we talk a little bit about the technology and how it's applied as a process, let's walk through how we go from asset selection to issuance to trading of these smart contracts. What does that look like in practice?
The practice is always depends a little bit on ultimately the issuer, the purpose of the tokenization, the use case ultimately, and what mandates they're under. So when we talk about I think the process of tokenization, what we're seeing is, at the end of the day, a lot of different ecosystems being built, right? As they say on Wall Street, walled gardens, right? When we look at, say, JP Morgan or Citi or Goldman Sachs and others that are entering into this space, they're not necessarily approaching it from a interoperability perspective. Now, the cool thing about this technology is that there are a lot of great interoperability providers out there. You're seeing assets like others that are now multi-chain, right, and operating in different ecosystems. So the idea of even just selecting one chain is now evolved to what different ecosystems might you want to target, and how do you ultimately, bring your asset into that ecosystem or that blockchain. And then ultimately, I guess, when you look at it from the startup side, right, you're seeing a lot more collaboration. You're seeing a lot more different pieces coming together, or end-to-end solutions being developed, so that if you're an issuer, you don't have to necessarily go and figure out all the different pieces, which is, friction. You're saying, okay, you're going to a provider, and Ed can say, look, we do all the different things now. We have a broker dealer coming as well, et cetera, right? So I think there's been a great evolution to the market where it's much easier for asset issuers to get into the game, to work with service providers that have, let's say, ironed out the kinks. And then on the flip side, we've seen Wall Street get very, very active. But I think you're going to see a lot of still walled gardens continue to develop. But they're going to start to connect over time. And that's when things will get really interesting, in my opinion, especially not just with each other, but also into DeFi, which is, another major trend. That's another topic I guess we can get into, but it's a great question, Matthew.
Yeah, I think that, as professionals, it's our responsibility to educate our customers on how we would satisfy solutions to their problems. I think we know enough about the technology that we don't have to keep talking about the technology that's necessary. We need to talk about the solutions that we're providing a customer. I mean, I'm getting 10 times more calls than I did last year for tokenization, which people now come to realization that they want their assets on chain because they want optionality in terms of their assets. They want to be, liquidity. They want to be able to recapitalize, their equity that's trapped in their assets. They want to find, longer term debt solutions for their properties. They want to keep their assets longer. They want new shareholders. They want to provide liquidity to the current shareholders. So, when we come in, we start talking about the different interchain operability and different things like that. And we talk about the different wallets and movement. We confuse our audience. They don't care about that. They have no desire to know about how to handle their wallets. I mean, that might be an area that they would learn about, is how to secure their wallets. But all the difficulties that we're going through in terms of how to maneuver an asset on chain and move it from one person to the next, they just want to know the end result and how it's going to get done, and know that there's someone who looks at them and takes their responsibility seriously to get it done. And I think we need to move from all the tech talk, and because the tech is there, right, and move into really the optimization of our skill set in terms of real estate on chain. So I think that's happening now, and I think there's more people just running up to operators, service providers, and saying, "Hey, can you help me? I want to do this." And that's what we look for. We don't really look to just educate and talk to people about the ABCs of tokenization, but really to talk about, hey, what's your problem right now with your real estate, and how can we help you with that problem? I think that's where we need to move the needle to get better traction.
That's a fantastic approach.
I actually see it quite a little bit different. So from my perception, what the market really needs right now is that it's not only about the asset itself, it's about the goals of the clients and how to achieve those goals for the client. So most of the clients come because they need to raise capital. So we have a very strong collaborative approach that we connect the assets, if the clients wants that, to different marketplaces on a global scale. So whether they want to, I know from CK that AsiaNext, for instance, is operating in Singapore. Some other partners are also operating in different jurisdictions, have their presence there. So the question would be for the next phase and for the clients, what they are interested in, how to issue those tokens and how to distribute those tokens in different markets, how to reach the capital in different markets. And that's a challenge which the clients face when it comes to capital raising. And therefore, they need solutions which are not siloed and walled gardens, which we unfortunately see quite a lot in the US at the moment with the ATS and so on. But how we can bring assets flow from the issuer to different marketplaces where they can find the investors they are looking for, where they can find the capital. So that's a topic where technology really matters, because many blockchains, as we have seen quite recently, or RWA chains, they are not very suitable for tokenization because they do not provide the technology layer which is necessary to combine data, combine the assets, and have the smart contract capabilities as well to really have this interoperability aspect where, because not every marketplace uses the same tech stack. So you need to combine tech stacks, combine distribution channels in order to provide the best solution for the clients. And that's not working as a siloed garden, but you need to collaborate with the best in the world, which like-minded institutional marketplaces to actually bridge the gap between capital and assets.
Great perspectives from the three of you. I mean, focusing on the client problem, but then also realizing that we have to solve the technology portion. And there's sort of a dichotomy happening here where technology is still a big portion of it. So it's not completely removed from the conversation, but we are also trying to remove it from the conversation, at least on the client end, so that they have a lot of that confidence. And this goes into the third question that I have for all of you, which is about building that long-term trust and addressing some of the concerns from the client side. So whether it's compliance, custody, if we're placing that responsibility in the hands of the client, or perhaps actually accessing liquidity, where are some of the bottlenecks, or where is the current friction, and how do we overcome that?
Yeah, I start off. For us, we look at clients. There's two group of clients. The issuers, the sell side is one clients. The buy side is the other group of clients, investors. And in my opinion, the investors are more important now because everyone wants to raise money. However, where does the money come from, right? But if you look through all the different kind of investors out there, each of them have different objectives to assess that product, right? And that's the reason why they are looking at tokenization. One of them is to get access. That's where I think real estate gives a lot of that, right? Fractionalization. The second reason that I think that they are looking at will be cost, especially if it's a products they can get in the traditional forms. How to attract them to take these products? You have to show them the cost efficiency. You pass it down to them. The 16 trillion of cost savings out there. How do we pass it on from the issuer down to the investors? That's something that we work very closely on, and we manage to get issuers to pass on those costs as well. The third reason for it is mostly for settlement. Some of them, because of certain use cases, they might need instant settlement, which traditional rails can't give. So for me, the friction of all these come in really understanding the clients and not just selling tokenization as a technology solution to investors. And from a lot of the investors, I see there's a couple of issues or frictions that need to be addressed in different countries. One of them is regulations. A lot of regulatory, I don't think there's one regulatory standard in the world. I think that this year you will end up to 3 to 4 wider global standards. US definitely, Middle East probably, EU definitely. In Asia, there's probably a couple coming up. It's still being evolved. So I think that without a clear regulatory standard that can harmonize between borders, then what Daniel said earlier is it will be a challenge, right? When you want to move assets across borders. The second issue that I feel, especially in the traditional players, institutions especially, is their own internal framework that they need to come up with to be able to accept just tokens, to open a wallet, to assess these products, even though it's products they're familiar with, just because it's on chain, just because it's in a token form, they need to come out with a different set of risk framework and compliance framework to address that. And that actually takes a lot of time. But institutions need to go through that journey to do that. And I think these two are probably the largest friction that I can see at least around in Asia.
For me, definitely I'm adding to the leaders here. What they share all of is correct, and but let me make it more simple as we discussed in our presentation, and I will take Edward highlights a very important point where we need to make it simplicity simplicity is the most important to our niche or the target audience, as we discussed. I also said in my presentation as tokenization, it can help the 80% of any population, which is the middle and low middle income people. And these people, especially if you start telling them about the wallet and starting how to register and KYCs and AML, they will not be interested 100% to follow all that stages, honestly speaking. So I believe in order to succeed, this technology is to, as he said, Edward, to share awareness to that segmentation, especially because they are the end user, and where the demand, if it's been already available, the supply, it will be easy to generate. So I believe we need to make the technology more simplicity. I do agree, yes, the regulation still is not quite clear international wise, but let's be very honest. And honestly speaking, everybody has started crypto and investment in the crypto, and there is no regulation in the crypto till now as we're speaking. So the issue is where the trust can be built, where the people can get the benefits of that technology. And if we really reach out to the right audience, the right segmentation, and really we solve their problems financially, and we get them to a source of income, I believe the other pillars or the other partners, it will be easy to solve.
I think that the friction I see when I'm talking to clients is typically education based, lack of knowledge about what the capabilities of tokenization are. Also fear because they confuse the tokenization of digital real estate in terms of securities with the tokenization of cryptocurrency and how those two things are different. They hear about how people can have their digital assets in their wallet and have their wallet hacked and the assets are gone. They fear that can happen with tokenization, but they don't understand that securities are registered on the blockchain in their name, in their wallet. And so therefore, if they were hacked, we can actually burn those securities and replace them. They don't understand these basic things because they hear stories from not us, but others in the industry. So they're confused. And I think we've got to really focus on, again, the solutions that we're providing the customer. And it's not always just liquidity. I mean, I think first having a state of being digital then gives you optionality of what you can do being digital. And I think walking our clients through those processes will allow them to see that, wow, I was getting most of my capital from, my development pipeline, basically from local family offices or one or two institutions. But as that bucket dried up, they don't have any other resources and where they can find their capital. But being digital, they can actually go across border and pick up many investors who have different reasons to be investing in U.S. assets. And so I think these are things that we need to clear up. Also, I always hear in every conversation the talk about regulatory construct, the regulatory friction, and I don't find that to be a problem. Being licensed with the SEC means that we're focusing on the same framework that's been established in 1933, which is basically there's rules on how you set up the framework, rules on how you issue, how you do your due diligence on customers, and process transactions. And those still apply today. I've looked at what's going on in Europe. I see what's happening in Asia. I don't think the regulatory framework differ too much from what the SEC is doing. I mean, there's one way to kind of process investors, but we make it seem like the regulatory system is so unstructured that it's scary for investors, or I should say issuers, to get involved because they worry that the license or I should say the framework has not been established, and therefore they don't want to get in the game because they don't want to get sued or fined by the regulatory agency. That is totally not true. I mean, here in the United States, if you're working with a licensed distributor who's a broker-dealer, they know the format. I'm sure in Asia, if you're working with a licensed practitioner, SBI, they know the format. So there's not much risk with regulatory as we talk about, but I think is the people who are unlicensed who may be causing friction in the industry. But I think we're making progress.
That's a great perspective. Thank you, Ed, and I'm glad that you chimed in there because I was going to spotlight you anyways, just knowing that RedSwan is, of course, a licensed broker-dealer, and that plays a big role in all of this, whether it's the legal formation to actually structure these deals or the distribution of that and creating the rails. So thank you for jumping in there. As we look at the global investor base, we often talk about retail investors, but at the same time, we know that a lot of engagement is coming from institutional investors. So of the different types of investors that we can engage, whether it's within our own country or outside, small investors or large, who do we think is going to have the most benefit? And there's many different benefits from the technology, but who do we think is going to have the most benefit from tokenization of real estate or other real world assets?
Let me just jump here and start this very good question, Matthew. And I totally agree with you. Everybody has got the benefits, but I think the main pillar, as our model example, is the government. I said the UAE government here because government is always, if UAE trying to be one of the best 5 government in the worldwide. And, the resource of income in the government is always been demanding on the oil and gas, honestly. So now having a different GDP and different resources of investment for the country income to be in the real estate, it's become like a trending in the market. So having more transaction, more interest from global wise to the government, I think it will increase their GDP for the non-oil and gas, and it will shows that the government doing a great in order to increase their economy and having a stabilized of the income. And the other problem is, as I said, different culture, different nationalities is always because of the expenses and because of the lifestyle is very high in Dubai and UAE. They are trying to have save their money and transfer their money to their own country. And also this is another challenge for the country because they are transferring their amount outside the UAE. So now with the tokenization and having open a space to these people to reinvest and to re-liquidate this money again to the country government again, it will support the dirhams, or the economy in general. I know everybody is getting benefits, but from our model, our perspective, sorry, I think it's the government is the win-win. So that's why maybe the UAE, it become this one of the regulatory has approved this tokenization in the market.
Well, you said who's going to benefit the most. That's a good question. I think, and I'm selfishly speaking, that we all on this panel are going to benefit the most because, and I think also early adopters are going to benefit because when you start to see change take place in an industry, especially as large as the tokenization of assets and what it affects on all these different asset classes, cracks appear in the system. You start to get cracks, and those early adopters that jump in and fill the void will start taking market share from those traditional leaders in the market who are slower to adopt. I mean, I've watched companies that tried to tokenize 3 years ago internally and spent a lot of millions of dollars and still failed, but yet companies like ourselves are moving much faster because we're more nimble, more efficient, and know exactly what we're doing. I think you're going to see benefits from those early adopters grabbing market share, whether it be servicing customers, whether it be tokenizing assets, whether it be in broker-dealer transactions, whether it be referring deals. You're going to see a lot of benefit for people who are leaning in hard because it's happening right now, and I think that they're going to continue to see their business grow. So I think the early adopters are going to be the beneficiaries for this change, which is why all of us are on this panel right now, because we're playing a role in the business, and we all see that role enlarging, increasing on a monthly basis. And so I think we're the winners. Thank goodness for that.
Let me add another perspective. From my perspective, it's also a lot from the emerging markets who are benefiting. Like I work and talk a lot to players who are outside of Europe, outside of the regular Western world, I would say, where the capital markets are very efficient, very well developed. And when we look at the accessibility to capital outside of this developed capital market infrastructure, there are many who have great assets, great businesses, who have great products out there, who just need the support from the financial market infrastructure to prosper. And that's, I think, what will benefit the most, because tokenization, the blockchain is a global network, and with players like us who connecting assets and to the capital on a global scale, it helps them to reach out to new investors outside of the network, outside of the home market, and it connects them probably for the first time in many occasions to international investors, so to new liquidity. And that is helping especially emerging markets who are lacking this kind of infrastructure, the capital market infrastructure. And now they're taking a leap, taking one jump start ahead and jumping basically the progress of integrating into the capital markets by integrating into the digital assets markets. So the tokenization, the digitization of money and assets will help especially those players who do not have the access to capital market, who do not have the infrastructure right now at hand. And it is them who will benefit the most. That's my humble opinion on that.
Yeah, I actually agree with Daniel on that. So, for example, we're focusing in Nigeria and Ghana and Kenya. These are markets that most people in the world don't know anything about. And to be able to see high quality assets where headquarters of Huawei or EY in those markets that are generating good yield, and comparing it to high rises in New York or in San Francisco or in Dubai, these are opportunities that really never were available. So these emerging markets were pretty much isolated from the overall ecosystem of commercial real estate. But now that tokenization is shining a light on them, is bringing them to the marketplace, people now get a chance to see what's going on in Dubai, what's happening in Vietnam, what's happening in Singapore, what's happening for sale in Africa. And I think that's very positive for the world to become smaller in terms of the investment community.
Yeah, I agree with Daniel and Edward as well. I think giving access to global investors, especially emerging countries, definitely it's not just real estate, right? If you look at payments itself, that's the very obvious use case. However, as I mentioned just now, I think that there are different objectives for different client groups, for different investor groups. I think institutions will play a big piece as well, right? Now institutions invest in bonds and the funds, and if you give them 5 basis point savings of that because of the operational efficiencies, they will be saving a lot of money there. So I think the institutions, while not everyone is on the ship yet. However, I think that in the future, institutions will also benefit. I guess everyone should benefit from this. The people who don't benefit are probably those intermediaries that needs to probably be evolved to adapt, be adapt so that they're still in the value chain. I think those intermediaries are probably the ones that will need to rethink their business models. Yeah.
Awesome. Herwig, do you have a closing comment for us?
Yeah, sure. I'll just echo what CK said, which is I think it's everyone. It's a bit of a cop-out answer, but he's completely right. Whether it's institutions or whether it's access in emerging markets, it's the automation and the savings that really are going to translate to the bottom line of better rates for borrowing and lending, better asset pricing and valuations, more liquidity for assets in general by connecting the world. So bottom line is everybody wins. This is the next evolution and the next operating system of finance. So it's an exciting time.
That's a beautiful closing remark. I think it recaps a lot of what we wanted to touch on, all the different benefits that are being trickled down to all the different stakeholders involved in a tokenized real world asset project. So in the interest of time and to be respectful for the next speakers coming up from Franklin Templeton, we're going to wrap it up here. I appreciate that everyone has tuned into this panel, Tokenizing the Tangible, the Rise of Real Assets in Web3. We've had great speakers. I encourage everyone to check it out. And I appreciate Augustine for bringing us all together for the STO Spring Summit. So without further ado, I think we'll close up our mics and go on to the next session.
Thanks, Matt.
Thank you.
Bye-bye.
Everyone.
So everyone, happy tokenizing.
Thanks for joining us at STO Summit Spring 2025. Stay curious, stay connected, and remember, the future is tokenized.